members of this committee are present. And in addition, we have Zach Walker, City Manager, Andrew Frazier, City Management Analyst, and Melissa, welcome to your first meeting as Finance Director. And I'll let you introduce people on that side of the room.
So next to me is Nancy Cooper, the Assistant Finance Director. And Chester, please remind me of your last name.
Moyer.
Moyer. Yeah. And he is here to present the annual financial statements for us.
All right. Thank you very much. I wasn't coming up with Chester's last name either. That's why I thought I'd let you introduce. All right. All right. First thing we need to do is approve the minutes of the November 20 meeting.
Mr. Chairman, I'll make a motion to approve those minutes. Otherwise, any of the committee members would like to make alterations.
All right. Have a motion.
I second.
Have a second. Any changes or?
I don't recommend any.
If not, all in favor, say aye.
Aye.
Anyone opposed? All right, we're good. All right, with that, we're gonna get an update on from Andrew on the utility building and animal shelter projects that he's working on. So, Andrew, it's all yours.
All right, yeah. As previously mentioned, I'm Andrew, the management analyst for the city. I'm about 90% complete on my utility billing project. I'm in the final phase where I send out management responses. So it's essentially complete. I just got to do the PowerPoint and get management responses back to me. With the animal shelter project, I'm about 20% complete. I went on a tour with council members and employees on other animal shelters like the KC Pet Project and some other local facilities. Kind of get an idea before I dive too deep into our animal shelter. It was great. Got to meet Soli. Yeah, so pretty early stages on that one. And then, you know, I'm doing various, we call it, what is it, the contract reviews is part of my job. Those always come frequently, do those pretty regularly, and also working on an annual report. So I got those working almost all the time, so that's kind of where I'm at.
All right, thank you. Appreciate that update. When you're ready to schedule the presentation on, well, we'll talk more, I guess, more about our next meeting at the end here. So, and then we can talk about when we might do that. So, all right, sounds good. We requested a update on the county ARPA funds from city manager. I guess you're going to make that one.
Yes, thank you, Mr. Chairman and members of the committee. I was asked to give an update on the American Rescue Plan Act, particularly the status of Jackson County's allocation of funds. So as a reminder for everyone, the county had about $71 million of the federal ARPA monies to allocate. Municipalities and local government jurisdictions received these funds 3 years ago and had until December 31st of 2024 to have those either fully spent or encumbered for the purpose for which they would be spent. The county had a difficult time, I might say, deciding how to not only allocate those funds, but the process by which they would allocate them. You may recall that the Jackson County Audit and Finance Committee issued a request for proposals from governmental and non-governmental entities to request funding in about 5 or 6 different spending categories. City of Independence participated in that based on guidance and direction we got from the council. That committee went through that process, made recommendations about how to allocate those funds, but the county executive vetoed those decisions on the basis that it was his belief, on advice of the county councilor, that the process used by that committee was not in keeping with federal law and guidelines about how to allocate those funds. So there was quite a back and forth about how to spend those funds, up to and including in early December, the county making additional recommendations about how to spend those funds, including some projects here in Independence for which the city did not request funds. An example of that was funding for park improvements at McCoy Park, which was not a project the city had made a request for. And I say that just to be illustrative of the somewhat chaotic process that the county went through. Ultimately, what transpired so that the county did not relinquish the funds back to the federal government was the decision to reimburse themselves for previous expenses that qualified under the American Rescue Plan Act to the tune of $71 million. So that included things that they identified like lost revenue, COVID response, whether that be administering vaccines, personal protective equipment, healthcare clinics, all manner of activity that qualified. What that has in effect done by doing that is free up $71 million in the county's general fund that they could now go through a process and decide how to allocate those funds. They've had a few meetings now in calendar year 2025 and still have yet to come to a consensus about how to allocate those funds or how much to allocate for projects. So the money is still alive. There's an opportunity if the county so chooses to allocate those funds, but we really have no clarity on how they intend to award them or what qualifying projects may be, or the total amount that will be made available.
Okay. Any questions for Mr. Walker on that?
I have just one. I guess just in theory, they don't have to spend that money down at all then.
No, ultimately, they could decide we reimbursed ourselves and allocated our COVID, our ARPA funds, and now we'll do, there will be no allocations to partner organizations, be they nonprofits or local governments. That is one of the outcomes that could happen.
And I'm assuming that they have at least a large portion of those funds, or will have, in investments to be able to heighten those $71 million or whatever their allocation is. So they are in the ability to have substantially more money.
That is correct. As you'll see later in a conversation of financial review from our finance department, we receive investment income on idle funds, and as long as $71 million is sitting idle, it will continue to accrue interest and build that reserve balance that could be awarded as well.
Sure. Well, thank you for the update. That brings a little bit of clarity, at least to my mind, and the other organizations that are in the city and my district that are hoping to have some allocations. So, thank you.
My pleasure.
Mr. City Manager, what is the battle? Can you explain there's sort of two sides on what's happening. Can you explain the battle?
As we understand it, what we do know for certain is that the county purchased a building in downtown Kansas City, and you'll commonly hear it referred to by its address, 1300 Washington Street. The county executive would like to see that building renovated and utilized for county offices and county services. There are members of the county legislature who disagree with that decision and do not want to see that building renovated and utilized for those purposes. In fact, they would like to reverse that decision and sell the building and continue to utilize the downtown courthouse and the facilities here in Independence. The county legislature votes traditionally what we've seen in a 5-4 split, where 5 legislators are in favor of allocating these funds for this purpose. There are 4 legislators who are not in favor of that, and that does not provide them with a veto-proof majority. And under the county charter, the county executive can veto actions of the legislature. So because he feels that half of the amount, about $35 million, should be spent on renovating facilities, and then the other half could be used for allocation to partners, he's vetoed any action that does not have funds for capital maintenance and capital improvements. And then the majority that votes to allocate those to those partner organizations don't have a majority to overcome the county executive's veto.
Thanks.
Mhm.
Other questions? Okay, thank you, Mr. Walker.
Certainly.
Appreciate that. All right. That brings us to new business. And first thing up on the new business is our audit presentation. Ms. Cabrera, any comments in advance of that, or?
No comments from me. I will turn it over to Mr. Moyer from the firm Reuben Brown to present the findings of our audit.
All right, thank you.
Thank you, Mr. Chairman and committee members. My name is Chester Moyer. I'm an audit partner with the firm Reuben Brown, and my role is as the external auditor for the city. So I am here today to present the results of our external audit as of June 30th, 2024. I'll be using the slides that are up on the screen to illustrate some required communications, but just to give some visuals, this document is the financial document of the city as far as what was audited. So this was prepared by the finance department. Many people, many hours, many efforts went into this document. The only thing in here that's ours is the audit report letter, which provides our opinion on this information. And just to summarize, we issued a clean opinion or an unmodified opinion, and that's the highest level of opinion that we give as auditors. So that's a clean opinion. And we had one finding to report that we will talk about later on in the presentation. So we are also engaged to perform an audit of the federal funds, and the city manager just described some of the federal funds that the city has received previously that we also audit. I'll talk a little bit more about that in the presentation. That portion of the audit, as I'll again reiterate, is ongoing. To this point, we have no findings to report from the federal funds audit either. But to begin, just to get started with these required communications, you have a copy in your hands here. I'd like to start with page number 2. And that's just a summary that says that as part of our audit, we are going to evaluate, and we did evaluate the accounting policies of the city to make sure that they're in accordance with the accounting standards. And we have evaluated them and determined them all to be acceptable. On the next page, page 3, we also evaluate all of the estimates that were within the city's financial statements. So there are areas of significant estimate. One of those areas is your other post-employment benefit obligation. If you look at that footnote or your obligations footnote, you'd see that as one of the larger obligations of the city. That calculation is done by an actuary, and we do review all of the inputs to that calculation, including the census data, and then all of the estimates that the actuary makes in making that calculation, and determine them all to be reasonable. We also point out to you on the second side of that page, on the right side of the page, disclosures that we feel are maybe more important than some of the other disclosures. They're all relevant, they're all required, but these 3 disclosures are particularly important. And the first is around your deposits and investments. That's what the city has and holds, and describes the nature of the investments that the city holds. Secondly, we have the tax revenue, shows the sources of the taxes that the city receives. And then finally, the long-term obligations, which include all of the notes, the debt, and other things like the other post-employment benefits obligation that I mentioned previously. On the next page, we're required to communicate to you if there were any misstatements identified during the course of our audit. So if we're presented with financial information and we identify an error and we report that back to the city management, we would report that to you as a misstatement. And we have no misstatements that are left unreported or unrecorded. We call those uncorrected misstatements. Sometimes management and we agree that those are not material and don't need to be recorded. We have none of those to report, and we also made no adjustments because the information presented to us was incorrect. That's outstanding. It's a very strong indication of the aptitude of the finance group in presenting us with the information. These are complicated financial statements. There's a lot going on, and it's a point of note or a notable item that there were no misstatements. Page number 5, we just have a few other things to highlight. There are other auditors involved in our audit, so the Cable Dahmer Arena does roll into the financial statements of the city. That's audited by another auditor, and we work with them to make sure that the information they provide to us is acceptable, and they've been great partners to work with. We also report that to you if there were any difficulties in working with management or any disagreements, and we're pleased to report that there were none. Turning to page 6, we want to make sure that we clarify what we audit and what we don't audit in this packet. So this packet has some information at the beginning called the introductory section, and at the end, many pages on statistical information. We don't audit that information, but we do audit the basic financial statements in between that, and those basic financial statements do support the information that's presented in the statistical and introductory sections. And then on page 7, I'd like to talk a little bit more about our responsibilities under government auditing standards. So we not only do our audit as a commercial entity would perform an audit, but we have a separate layer of auditing standards that we are held to, government auditing standards, because the city receives federal funding. So these auditing standards are developed by the Office of Management and Budget, and we layer those on during the course of our audit. So one of the areas where we see an output from that is if we have to issue an internal control letter, and we do have one to issue this year. And what happens is that during the course of our audit, we're heavily involved in making requests, and management certainly is aware of that. We make many, many requests during the course of our audit. We give an opinion on the financial information of the city, and as a byproduct of our efforts, we'll understand the processes and understand some controls that the city has in place. We don't give an opinion on those controls, but we do test them, and again, it's sort of a byproduct of the other work that we're performing. So we did note this year during our payroll control testing, which is described further in this document, that there was one instance out of 40 where we identified a person had not been paid for holiday pay, which was subsequently corrected by the management team here at the city, as well as noted in their corrective action plan. Systems have been set up by the city to make sure that that doesn't happen again. So we feel that that was something that we felt obligated to report to you, which we've done through this letter. We also have an understanding of the corrective action taken by the city and that we had no other instances identified that would indicate otherwise. So I'd also like to comment on page 8. This is what I mentioned in the beginning of the presentation, a little bit about the federal funds that the city receives, and the city manager did talk about the potential for additional federal funds, although the designation of those funds will be a little different now that the county has officially received them in. At any rate, what we have to do is look at the federal funds that the city has received, and each year we do an analysis of the groupings of those types of funds that have been received, and basically through the standards we're required to rotate in programs. This year we've identified 3 programs that we have to audit. The DWI enforcement program. The second one is one you'd certainly recognize, the coronavirus state and local fiscal recovery funds. And then the highway safety clusters, the third program this year. The deadline for the completion of this portion of the audit is March 31st. So that is still in process. Talking with Nancy before this still been exchanging a little information to complete this portion of the audit. I'd say that we're about 95% through, and that includes my review. And we have no items to report, so we have no findings at this time, and we'll provide a completed document when it's done closer to March, and that'll be also consistent with the timing required for the federal upload that we'll coordinate with Nancy. On the next page, page 9, in addition to just providing what was in this letter, which we would call significant deficiencies or material weaknesses, items of control that have a separate reporting requirement, we have a few observations that we like to communicate just to provide some of our perspectives on what we think would be beneficial to the city. So again, this is a byproduct of us working very closely with the city and pointing out a few things where there may be other oversight at the management level to make sure that these projects continue moving forward. So the first is that I have listed there is tracking the capital assets within Munis. We believe that would be beneficial to the city's efforts in recording the depreciation and other responsibilities around those assets, and our understanding is that it's still in process, as we saw, and there is a project plan to improve that during this upcoming year. The second item we have there is making the reconciliation of the billings and the utilities a little more frequent to make the batch sizes smaller. That will assist us in our control testing and things that we perform on the utility billing, and also make the process from the city's perspective easier to track down specific requests. And we also understand that that's in process and that there's been improvements since last year, and that the frequency of reporting should be increasing going forward. And then the third item is shortening the time to close the financial statements. So I mentioned these are a complicated set of financial statements. The trial balance that's behind this is huge. And the longer the process takes to close those financial statements, the more opportunity there is for other changes, other things to be brought in, other corrections to be made. And it makes the auditing process on our end a little more difficult because we have to move with those changes too that might include reperformance of some work. So we did note during this current year that there was a significant improvement in that closing process. I still feel like there is still some room for improvement, but it was significantly improved from the prior year. So although it still says in process and ongoing, I do want to recognize the efforts there and the outcomes that have come about as a result of those efforts. And then finally, one thing that's not on here, but I still want to point out that I'm very pleased with, is that I do have the position filled for the finance director position. And there are many, many hands that go into preparing this financial information, and many of those hands work through Nancy here. And it is a concentration risk for the city in terms of knowledge and ability to put this together. So I do believe that it should be a priority for the city to continue to make sure that those responsibilities are distributed, that there's some redundancy and understanding of how these things are put together. She does an outstanding job, and I mean that. It's not written anywhere because I can't write that, but I can say that. And that person's going to be hard to replace if that was ever needed to be replaced. So I just want to make sure that there is an awareness of that, and that the city's putting forth effort towards getting those redundancies and understanding, spreading the work out, and making sure that this is a position that sustains for many, many years, looking forward as the city continues to grow. So I'm very pleased that the position has been filled, and having a brief conversation before this meeting, I think there's a mutual understanding at the management level of that as a priority. So those items being said, that concludes my formal prepared remarks, and I'd be happy to take any questions from the committee or the chairman or anyone else.
Okay. So, I mean, to summarize for our citizens, it sounds to me like you've given us a clean bill of health. You've said, continue to exercise and improve things, and continue to, the normal things that you might hear at a physical, but improve, the way we're doing some things. But in general, we're we're moving forward in the right direction, and you've given some things to consider, but I don't think I have any other questions. John?
Thank you, Mr. Chairman. Mr. Moore, thank you very much for your kind remarks to our staff and the leadership team that we're pulling together, have pulled together, because you make the job easy for everybody to be able to get these numbers right and correct, and take back the feedback and assimilate it into our processes. Mr. City Manager, with this good record, more of a clean bill of health, as Councilman Fears was saying, how do we work this into, or how is this worked into our bond rating when we go out for bond issuance, as they will come and look into our books, make sure our finances and our house is correct? How does this work and help us with that process?
Well, if we continue to use the analogy of a wellness exam, maybe it's appropriate to liken this as just one part of that physical exam. You know, one panel in your blood work maybe is an analogy. A credit rating agency is going to look at a totality of factors like our reserve balance, which we're finally meeting, our total debt load, which we've paid down a tremendous amount of our economic debt, closed quite a number of tax increment finance projects in the last year. We presently don't have any general obligation debt. So on that front, we're doing very well. These great assessments with our annual audit are an important part of that, but it will only serve to help give a better overall fiscal health impression to credit rating agencies. So that's why it's important to maintain a good annual report, because it shows that the city has good policies and practices in place to ensure accurate and timely reporting, adherence to financial best practices, audit standards, et cetera. So it will only serve to work in conjunction with all of the other things that the council has challenged us to do to help further stabilize our financial position.
What is our credit rating now? What do we stand at?
So we have a couple of different rating. We have our general overall city rating, which is listed as A negative, I believe.
Nancy's checking on it right now, Dave.
Okay, and then while she's checking on that, our economic incentive bond, where we have backed projects, specifically the Crackerneck Creek project, that gets a rating, and then utilities as a whole have a credit rating as well. I'm not sure if I stalled long enough to give the finance team time.
Sure. So the A- rating, A- stable, is for economic development projects.
Okay.
So we have not undergone a rating process for general, I assume for quite some time. So that will be something that would have to happen ahead of the GO bond issue.
Okay. Well, is there a formal process to start that, or is that, how does that process?
So we have had some conversations with our financial advisor, Columbia Capital, particularly in light of the the bonds we've been talking about for public safety, the fire stations, and this facility, converting it into a police utilization. But Melissa's right. If we start issuing GO debt, we're going to have to seek a credit rating to assign with those bonds as well.
Thank you.
So just on that note, do we initiate that ahead of the April vote, or do we initiate that after the fact?
Afterwards, it would come in advance. It would come after we've got the authority from the voters to issue debt, but before we would start drawing down on that debt.
That's what I thought. I just
Yep.
double checked.
Yep, very good.
Anything else? You have anything you want to add from the finance folks?
I'll let if Nancy has anything or Nancy doesn't.
We're good.
No, just thank you to Chester and our audit firm, and glad to have another clean audit. So.
Yeah, very good, very good. Thank you very much. We appreciate that. And we will, with that, move on to our monthly financial statements. I noticed there's some overview things. Would you like to go over those, or how would you like to proceed on that?
Sure. So one of my early directives was to add an overview to the financial statements. As you can see, I focused heavily on the general fund. That's typically one of the hotter topics when we talk to council or the public, since it does fund so many of our services. So I tried to go in a little bit more detail, provide some of the back analysis that we do both for budget projections, looking out into future years, on our sales taxes, so that as you're looking at the reports here, you can kind of see where we're at for the year and where we actually expect to end up. I am open, though, if there's something else that you'd like to see in this overview, any additional direction, certainly happy to take it and figure out how to put it into practice. So overall, I believe this was actually in the November financial statements, but we have received our real estate tax estimates from the county. So this is what they have actually sent out in real estate bills. It was approximately $59,000 below what we had budgeted for fiscal year 24-25. So a little bit less. Most of that was due to reassessments that occurred after we made the initial projections for this budget year. Of course, this being a odd year, the county will be doing assessments again and coming up with a new assessed value for the city. So we should start getting early estimates. I think the initial one comes in March, then we get one in June, and then the final one comes at the end of August, before we bring our tax levy to you for approval in September. So far, general sales tax receipts are down approximately 2% compared to the expected budget. I will talk a little bit about this more in detail at the mid-year financial update that I'll be presenting at the February 10th study session. But one of the things that I do is I take our sales tax receipts and I put the receipts back into the actual business activity month. So right now we're looking at business activity on a rolling basis through October of 2024. And what we are seeing is that we have actually seen a annual decline of about 1% in the city's retail environment. So this is specifically for retail sales at brick and mortar locations. So something we're keeping an eye on, especially since, our CPI is sitting at about 2.6%. So this represents some difficulty because as we're seeing an increase in prices, we're seeing a decline in our sales tax receipts. Aside from that, use tax, so that's obviously one of the larger categories on general fund and most of our special sales tax funds that we have yet to receive any money. So on those sales tax funds, first we received the dollars to the budgeted amounts in health and animal services, and then in the police departments, and then after that it starts flowing to the other funds. So we expect that flow to start occurring next month with the use tax receipts that we receive from the Missouri Department of Revenue. Aside from that, you might remember that the Proposition PD sales tax initiative started collection on January 1 of this month. And so we should start to see those receipts on our February disbursements that we get from the county. So it will be, or from the state, I'm sorry. It will be just a little bit longer before we start to see those amounts come in. Let's see. Oh, and one of the other things that you'll notice on the general fund financial statements there is that we did the transfer in from the American Rescue Plan of $1,035,143. That is to help cover for the increases to police salaries that are in the general fund. And then, of course, the remainder of the salary increases that we see for the police will be funded by that Prop PD sales tax. As of December 31st, 2024, we have an unassigned fund balance in the general fund of just shy of $16 million. So we are meeting our 16% reserve. Overall, things are looking pretty good in that fund. You'll notice we do have police is at about 52.07%. Most of their increases over budget are due to those salary increases that we saw this year. We are keeping an eye on fire. They're at 53.92%. So when we'd expect everyone to be at about 50%, we start to look at why might we have some departments that are over. Fire does have some overtime, of course, with this snow event. We expect that to continue with PD, fire, and the folks that are in municipal services that had to respond to that. Other than that, if you scroll through with the street improvement sales tax, they are down about 1% to budget. So you might wonder why general fund is down 2% and the special sales tax funds are only down 1%. Most of that is because there are different items that taxes can be collected on. So there often causes some discrepancy there. Unless there's anything special that you all would like me to focus on the additional funds, I'm happy to go through page by page, but I also don't want to take you through it if you're not interested in doing that. Any direction would be. I mean, we can go through all 100 pages of these financial statements, or if there's any high points that you had questions on, happy to address that.
Okay, any questions that anyone has for?
Not so much a question as, I guess it's a great statement that our internet or our e-tax fund is really overperforming, our internet tax.
Use tax?
The use tax?
Thank you. Yes, it's really overperforming well.
Yes, and a lot of that is still due to the changes that the state of Missouri made. So they have the rolling 12 basis for identifying if a business should be paying the use tax, which is if a business has more than $100,000 in sales in a rolling 12-month period, then they would pay use tax to the city. And I do actually have a detailed slide on this in the mid-year financial update to talk about it. Because last year, we were seeing 30 to 40% increases, huge amounts of money that has started to level off. But even looking month over month, it does not seem like it is subject to the same decreases that we're seeing from those brick and mortar locations in the city.
Is that decrease with the brick and mortar because of the higher inflation? To a certain degree, higher product price and stuff. What would your quick take be on that?
I think it's multifaceted. I think it's really difficult to assign it to just one reason. So yes, inflation here in Independence, when inflation starts to tick up, it does seem like it has a negative effect, by removing money from people's pockets to be able to pay for other things and go out and make purchases. But, I had been talking to Zach and Lisa about this, Lisa Reynolds. I had noticed that there was an uptick in store closings and anytime a business moves out, that is a loss of potential revenue for the city if people here are not going to other locations or if they then go seek those locations in other communities. So this is one of the areas that I would love to get a better look at, as soon as I can settle into the role and get staff on. But yes, I think it's something that we need to look at and we need to try to identify what the causes are.
So I'm thinking out loud with a little bit of liberty here, Mr. City Manager and Chairman Fears, as we're working through the economic partnership with the chamber, having a section of retention for businesses would, as once you get your feet a little bit more firm and we get this process done with the chamber, the partnership, could there be some cross collaboration and thoughts to think ahead on how we can retain and increase our development parts of the city?
I believe we need to be thinking strategically like that, and I think you're right. I think as we, kind of move our focus from the annual audit that's wrapping up, I know we've certainly got to turn our attention to budget development, but I do believe that level of strategic analysis is important to be thinking about and something that merits our attention.
And I would say, Mr. Chairman, as the council is looking through different contracts and into the future on how we do economic development, we should be forward-thinking when we review those processes. Thank you, Melissa.
Any other questions on the monthly financial statements? Anybody has? I'm actually good with what I've seen, so. All right. Usually I got a few
I know.
questions, but not this time
You
around.
got your stamp of approval?
Yeah, I think I'm liking what I'm seeing. All right, well, with that, Mr. City Manager, anything else that you would like to bring to our attention?
I think there were two things we wanted to make sure the committee, one is an update and one was just a discussion item. I will start with the update item first, if that's okay with you. This committee had previously asked me to spend a little time researching the wisdom and practicality of the city engaging a federal lobbying firm to help represent the city's interests at the national level. We've, of course, for the last several years now utilized professional services in Jefferson City to advocate on our behalf, but to my knowledge have not historically utilized anyone at the federal level. I want to start by thanking John Mayfield from my office for spending quite a bit of time researching this, put together quite a bit of information that was very useful, and this is something I'll disseminate to the full council. But based on the information, which I'll share a couple of highlights for you, this is something that I would recommend we take a serious look at. It's something that we're going to contemplate in the overall consideration of our budget development process that's coming up, and working that into the conversation as a new funding item for the council's consideration. But just a couple of data points that certainly caught my attention and led to the recommendation that we give this additional analysis. There are almost 15% of all lobbyists in Washington, D.C. are representing a state or local government entity. So this isn't exactly a rarity. You know, I certainly wouldn't say a majority of all lobbyists are representing state or local governments, but when you consider, you know, corporate entities, private sector, defense, all the various typical players you think of in Washington, to have nearly 15% of those all lobbyists representing a state or local government entity, that's not inconsequential at all. Washington, the federal government, allocated $1.2 trillion in fiscal year 22 toward municipalities. Now, granted, we're in a different administration now, so you know I can't certainly say that 1.2 trillion is the baseline, but just 2 years ago that was the baseline amount that was available and allocated. So I certainly think that speaks to the opportunities to go on offense and secure additional appropriations for our community to diversify our funding, so we're not relying exclusively on our own tax base, but have opportunities to open up funding for other needs. In addition to the offensive approach, though, I think it's always important, and I'll use the term playing defense, but I think this is also relationship management. There are 15 executive departments at the federal level and 438 agencies or sub-agencies of those executive departments. And I think as we have seen, particularly in recent years, with administrations representing both political parties, rulemaking has kind of become a predominant norm, particularly in light of gridlock at the legislative level. So these agencies have, I think we've seen, it's fair to say, a proliferation of rulemaking coming from those bodies. So being able to influence those, being able to understand them, being able to be proactively aware of them, particularly for a full-service city like ours that operates 3 different utilities, I think that's highly important as well. Mr. Mayfield's research found that there's a pretty wide range in the amount that municipalities pay for these services. He found a range from $30,000 upwards of $200,000. And that range really varied because of a lot of factors, but predominantly the size of the city, the scope of services being requested. So some municipalities are hiring to weigh in and influence on every local government bill. Others are hiring for a very specific or limited scope. Maybe there's a certain bill or a project they're trying to get funded or something of that nature. And then typically based on the size and expertise of the firm that you're retaining. John gave me a lot of good example cities, including Ann Arbor, Michigan, Billings, Montana, Dayton, Ohio. Those are all cities that have a population commiserate with Independence, that 120 to 130,000 population range. So all that to say, this is not uncommon, and I think more and more, particularly as I mentioned with the authority being given to those federal departments and agencies, it warrants more conversation and consideration on our part. So we will come back to the council in the budget process and kind of revisit that conversation, but I at least wanted to respond to the request of this committee to research that and provide some initial information on that.
All right, thank you, appreciate that. Do you have any initial thoughts as to what kind of focuses we might ask a lobbyist to engage on, or are you?
I've got a couple of
premature.
I have a couple of thoughts. The Square Streetscape project that will break ground next month is a $3.8 million project that is being funded entirely with federal funds. $3 million of that is an appropriation that was secured by Congressman Cleaver, and roughly $800,000 of that through our Federal Community Development Block Grant, or CDBG program. So I think that to me is an illustrative example of where we can go on the offensive and work with our legislative delegation to talk about priority projects and secure funding for those. But CDBG is a program that in recent years has received heightened scrutiny, and I think utilizing a project like that, or the Uptown Market, or even a lot of our neighborhood housing programs, it's important to speak to the spending power and the transformative nature that those dollars bring to our community. So I would see us advocating and defending for our programs, but I would also see, and this particularly I think speaks to our utilities, which, highly regulated environment, making sure that we are understanding the rules that are being handed down from rulemaking agencies, but also hopefully having a seat at the table to help advocate for how those rules are eventually finalized and the policies that are handed down.
Thank you. Any other questions on that topic for Mr. Walker? Okay.
I think the item that had some discussion, I know Councilmember McCandless and Mr. Scannell are here. I think there was discussion about a follow-up audit to Rental Ready. The council, of course, just adopted new code requirements for that program, but discussion about an audit on how that program is administered in the inspection process. So I just wanted to, I know Councilmember McCandless sent the committee an email, and think staff was here also to help answer any questions potentially about the scope of that audit.
Sure. So Councilmember McCandless and I had a discussion about this topic, and I know that Mr. Scannell is going to come to us in March with some information relative to the inspection process and what might, what if any changes staff might make recommendations for in that regard. And so, we discussed holding off on that additional audit. You know, number one, Andrew's really busy right now, so, he's got a couple of projects on his plate that he's trying to wrap up. Before we add anything to that, we kind of discussed waiting until, that presentation in March and then opening that topic, you know, up following that, if the committee's agreeable to that, approach. So, not trying to, you know, put anything on a back burner or anything, because that's important, but just from a practical standpoint, if there's gonna be some discussion come that, you know, I know you're working on, things relative to that, you know, I think we can probably hold off on that for the moment, at least. That sounds okay. All right. Okay. Any other topics anyone wants to raise at this stage of the game? Okay. Then we need to look to our next meeting, and I think I'm kind of looking at Mr. Frazier to see when, you know, you might want to make a presentation relative to the utility billing discussion, and that might, you know, we'll kind of see how that coincides with any other. You know,
Yeah, certainly. I would say within a month, I could have that done, you know, getting these management responses back and having my presentation ready within a month for sure. And I don't, like you said, I don't know timeline-wise if that
Sure.
is fitting.
What's committee's preference relative to, you know, we have been meeting, let's see, we were at quarterly, and then we went to, help me out here, did we go to every 2 months is kind of what we've been doing lately, or somebody help me out here a little bit? Yeah, about every couple of months. Yeah. So, if you said you'd be ready in roughly a month, so maybe we look to the latter part of, or somewhere in March for that presentation, as well as by that point, we'll have another couple months under our belt relative to our financials and see where we're at there. Does that seem reasonable to everyone? So that would put us towards the mid to latter part of March. The 19th would be a possibility, or if not that one, then the 26th. Either one have a, anyone have a preference? Okay, I'm gonna say the 19th. Let's look at March the 19th, and we'll have the presentation on the utility billing. We'll look at monthly financial statements at that point and see what else we need to, anything else that we need to add to the agenda between now and then. That sounds okay. All right. We'll do 3 o'clock on Wednesday, the 19th of March, and we'll go from there. Anything else for the good of the cause at this point? If not, I'll take a motion to adjourn.
I'll make the motion to adjourn.
I second.
All right, then we'll just be
Aye.
agreed that we're gonna we're gonna adjourn. Thank you very much.
Thank you.